Okay, Ken Range Theory Trader with you for the best trade for the New York session. This was a 8-hour course on the 8-hour chart. This was a 5 or 1700, okay, 5 p.m., 1 a.m., 9 a.m. We're looking for our expansion candle, okay. Obviously, it's retracing, but you could have caught the meat of this. So here's the deal. If ever you're trading USA session, you are looking for a 5 p.m. range. Now you notice that the pair did close above the range of 5 p.m. But what I do is that if this breakout, if this is less than like 10 pips, the close, then I would consider it for a reversal. And in this case, it was only 3 pips above. So when that 9 a.m. came around and opened, it only opened 3 pips above the 5 a.m. or sorry, the 5 p.m. range high. So in this case, I would have been okay to take it on the other side. And if it had closed like all the way up here, like a 20 pip breakout, then no, I'm not taking that. But if it was like what some people call a false breakout, I say anything less than 10 pips is ideal or prime, is prime suspect for a false breakout. So let's go down to the 5-minute chart. And we already got our London, I'm sorry, not London, but our template here. So the yellow box showing the open price at 9 a.m. And again, for these, we're really looking for just really a straight drop off the open price. So price opens and pretty much goes straight down. So you had a couple options in terms of entry. Let me see if there were any fair value gaps though that were created. Later in the game. So that wouldn't have been the best entry model. Let's see, change in state of delivery was right here. So, and if you don't know what I mean when I say change in state of delivery, you need to look at the entry model video on this channel. That'll explain all that. So change in state of delivery occurred on this candle here at 9:15, the open of that one. So you could have entered there, right there on that candle open, and just had a stop loss above the high. You could have got away with like we'll just say a 7 pip stop right there. Take profit, 30 pips. So that would have been good for 1 to 4. And then obviously on this retrace, after price came down, you could have scaled in some on those red closes, another entry here. Let's see here. So first entry could have been here at 9:15. There. Another entry on that red close here. And then maybe a couple more here. Like right there. And, as it falls, however many your account can hold. Keeping the margin in mind, obviously. So, but again, the entry model of this was the change in state of delivery. Okay, once the candle that creates the high gets closed below, then anywhere around the open price of this candle or even the low of this candle, either one. Sometimes you can mark the low of this candle that makes the high or the open price. Either way is fine. But the non-negotiables at the high of this candle must hold, and then you just would have got a straight drop. So that's how the whole thing played out. But remember, you always want to get the meat of the move because you would have been out of this trade by 10:25, and you see here it spent the rest of the day retracing. You don't still want to be in the trade when it's doing that. Take your piece, get out, go on about your day. So that was a very simple. Let me see how many pips it fell. 30, almost 37 pips. Okay, so yeah, easy enough. Okay, so that was the best New York session trade that I saw for the day. So yeah, that's it. Very simple. And I'll go back into the 8-hour. And again, so this is the 519 on the 8-hour chart. So there you go. So thanks for watching and have a great rest of your day.